quiz. One question. Do you remember the price of Bitcoin last time we spoke?
Oh, that's a good question. I don't, because I get a little fuzzy on it, but it was probably 32,000.
No way, man. It's way less. We spoke on November the 11th last time.
Oh,
it was
yeah. I love that.
$16,000.
That is great.
Yeah. And since then, we've gone up to 64,000. We've dipped under 50 today. It's been a pretty wild ride, man. How are you taking it all in?
Oh, it's good. Yeah. It adds for excitement, but, we're on a 20-year journey here, and Bitcoin does go up on average 213% a year, and sometimes it goes up a lot, and sometimes it goes down 20%. But it's just part of the process. It's a young technology. It's going to be somewhat volatile.
Yeah. Well, listen, I was reading your update recently. I get your excellent updates from Pantera Capital, and you set a summer price target of $115,000 for Bitcoin. So I want to ask a few questions about that first. Is that price target still on, do you think?
Oh, it is. It is. And that was set, actually not recently, that was set a year ago in our April 2020 letter, based on the halvings. And, we're right on track. And we've actually been on track almost every month since we published that. So I still feel rock solid on that.
Right. So I want to ask a couple of specific questions, because you said the summer. So we said anything, from June to August? Yeah,
we originally forecast August 1st, if we want to get really specific. I'm just, saying, well, it's still kind of sunny and warm in the Northern Hemisphere. If it hits 115, I'm going to be pretty psyched about that.
So how did you build this target? How do you guys come up with this?
Yeah, so I think this is really important. The halving, as all your viewers know, every 4 years, they cut the number of Bitcoin that are issued in half. And obviously, if you cut the supply of something, it goes up. And we've seen that in the commodities market. I used to be at Tiger Management, where we traded all kinds of really interesting commodities, and we'd always study, the production rate of mines, and if mines were being shut in, or there was some kind of labor disturbance and mines couldn't operate. If you cut the supply in mining, the price of the metal goes up, and that seems logical, and it actually happens in Bitcoin. We've had two halvings prior to this one, 2012 and 2016. So the first halving was actually massive, because Bitcoin had only been around for 4 years. There were very few Bitcoins outstanding. And in our study of halvings, the trough before the halving is about 415 days, something like that, before the halving. And then the peak is about the same distance after the halving. So the whole thing is about a 2.5-year period. And in those previous halvings, the first one, there was a cut of 15% of the outstanding stock of Bitcoins reduction for the next 400-day period. So it was actually, a very large reduction in supply relative to the amount that was outstanding or in float. And it had a massive impact on the price. The second halving in 2016 obviously was half as big in terms of the number of Bitcoins that were cut out, but there was also quite a bit more Bitcoins in circulation. So the reduction in supply for that going forward 400-day period was about 5% of the outstanding. So it was about 1/3 as big of an impact on the supply. And potentially not coincidentally, the impact on the price was exactly 1/3 as big. The price went up a lot, but a third as much as the first time. So when we analyzed it in August or April last year, this halving obviously half as big a reduction in the number of Bitcoin, and then there's even more Bitcoins outstanding. So it's taking out about 2% of the original or existing stock of Bitcoins out of the supply. So we used all those ratios, in very precise detail to then forecast the impact it would have on price this time. And we forecast the price would go up a little over 10x, which I know in the normal market sounds totally ludicrous, but Bitcoin goes up 10x every 2 years anyway. So doing it through this halving didn't seem hard to do. So when Bitcoin was about 8,000, we published a table, which is a forecast of each month the price of Bitcoin. And for a while, Bitcoin was a little behind the curve. For a while, it's a little ahead of the curve. And then last week, we had forecasted Bitcoin would hit $62,968, and it hit it that week right on time, which is pretty well. Obviously, we've had a setback, but I still think it's highly likely that we hit something like 115,000 this summer.
Yeah, I've got your table here, and you kind of you measure the weeks ahead, and I've got it here. Where is it? By the 15th of April, you had it down at 63,000. And then the 15th of May, you've got it at 74. So maybe we're just having that dip before we run up to 74.
Yeah, and as I mentioned, there's times in the last 8 months that it was a little ahead of pace. There's some times it's a little behind pace, and so it's not like a Swiss watch that you can't expect to hit each date on time like it did last week. But I just think it's way more than a 50% chance Bitcoin's to be a lot higher in the end of the summer.
Yeah. Do you just accept these dips like a lot of the hardened hodlers? You just seeing them, whatever, it is what it is, or are you trying to read into the data? Because there's lots of things happening. For example, I just saw the announcement of potential Biden capital gains tax increases. Do you look at things like that? Do you think that's affecting it, or do you just think it's just Bitcoin doing its thing?
We do. We have three different kinds of hedge funds. One is a Bitcoin fund, so it's just a passive tracker, and that one obviously we don't do anything other than trying to execute efficiently when new investors come in or people want to go out. But our other two hedge funds do have discretion, so we're trading early stage tokens, and then we have a fund that invests in liquid tokens. And in those, we are trying to maximize return over time. And so we do try and catch these downdrafts. This one we didn't catch. The one in February we actually got perfectly right. It peaked, maybe around February 20th or so. We took about 20% of our risk off. The markets came down 27%, and we put our risk fully back on. And so we're trying to add value that way. And we've seen it in the returns. Our Bitcoin's up about 100% year to date, and our liquid token funds up 320% year to date, and our early stage funds up 360. So we're trying to add alpha through active management. But the punchline is, we think 10 years from now, Bitcoin's going to be orders of magnitude higher. So we're not trying to be too cute.